closing journal entries. And adjusting journal entries are used to accurately reflect in your financial statements all the revenues that you've earned, all the expenses that you've incurred, and then to make sure that your assets appropriately state the benefit you have remaining, and your liabilities accurately reflect how much you owe at that date. Okay, so that's what we covered. Deferrals and accruals were the two types. Deferrals are those that postpone or defer the recording of the revenue and expense, whereas accruals record it prior to cash being received or paid. So I've got a bunch of little mini practice problems, and these are all for deferrals, and then we'll practice a closing journal entry problem, and then we'll go from there. So we're going to go through these. You can do them on your own. These aren't posted, but I will post these little practice problems for you after class. But my suggestion would be to try and do them on your own. Work through what you know, what you don't know, because this is basically what your exam consists of, or part of your exam. So these are all journal entries where you're recording the initial transaction, which is from either Chapter 2 or Chapter 3, and then recording the adjustment a month later. So this first one, Hockey Helpers paid $4,000 cash on September 30th to rent an arena for the months of October and November. So you need to record the transaction when they paid to rent the space, and then what is the adjustment after they've used it the first time, for the first month. So go ahead and try to work through those two on your own for a couple minutes, and then we'll go over it. Okay, September 30th is when they paid $4,000 cash. So right then, you know that they paid cash, and by now you probably know that cash is an asset and cash and assets go down with a credit. So if that's all you knew, you could write in credit cash for $4,000. That would get you partial credit. Okay, so write in always what you know and then try to figure out what you don't know. So if you know you need a debit, then you can start working through, okay, what are my options for debits? Does this make sense? Blah, blah, blah. So we know we're crediting cash for $4,000. And what are we exchanging for that cash? Go ahead.
Prepaid rent.
Prepaid rent, right? Because we're paying to use this space in the future. We haven't used it yet, which means we have the benefit of using it, which is what an asset is, in the future. So this is a prepaid rent example. Yes?
Did you just say prepaid rent was an asset?
It is an asset, yes. So we increase our prepaid rent account, decrease our cash account, initially when the cash goes out the door. A month later, oh, do you have a question?
Yes, there's all prepaid assets.
Ask that again.
So, are all prepaid
Assets, yes.
Assets?
All prepaid accounts are assets. Okay, so then a month later, after we've now used part of that benefit, we've used half of it, okay, through the month of October, we've used up part of that benefit that we have. What journal entry do we record? Go ahead.
Debit rent expense, and then credit prepaid rent.
Debit rent expense, credit prepaid rent, because now we've used up part of that asset, so our assets go down with a credit, and we have to record the cost of using that as part of our income statement, right? Because our income statement shows all our revenues, all our expenses, okay? And the goal is that our revenues exceed our expenses. So we need to know what are all the costs of running our business to make sure that we actually have enough revenue to even cover all of our costs. So paying to rent out a spot is going to be an expense. It's a cost of doing business. It's cost of running Honky Helpers. So $2,000 because we've used half of it in October, and the other half will not be used until November. Okay? Any questions on that one?
Do you have T accounts for these?
I do not have T accounts.
Are we going to have to do that for the test?
On one problem you will, and they can be very helpful on multiple choice. Yes.
So are we going to go through that like on the test, like we have the September 30th?
No.
Okay.
It doesn't look like this on the test. What it looks like on the test is these transactions are a whole problem, and these transactions are a separate problem. So you know that this problem is just journal entries from chapters 2 and 3. This problem, it'll say adjusting, and these are the adjusting journal entries from chapter 4. Okay, next. Super Stage shows received $16,000 cash on September 30th for season tickets that admit patrons to a theater event that will be held twice. Once on October 31st and once on November 30th. So what is the transaction initially when they receive the cash, and then how do we adjust after one event has taken place? So go ahead and work on that. Okay. So again, on September 30th, it says we received cash. So put in cash, debit cash for $16,000 on September 30th. With that, we have a credit. We need a credit. Cash goes up, that's a debit. Our journal entries have to balance, meaning we have to have a credit to something. There are, in this case, if we are providing a service, there are two options. Either we've earned the revenue or we haven't and we owe it. Okay, what's the situation here?
Unearned revenue.
Unearned revenue. We haven't earned the revenue yet. Okay, unearned revenue, remember, is not revenue. It's a liability. It goes on your balance sheet. Okay, so we received cash for something that we have to provide in the future. We haven't done anything yet. Not until we have the two shows can we actually record the revenue that we earned. Okay? Does that make sense to everybody? Any questions on that piece? Once we've provided one show, we've earned half of the revenue. So, go ahead.
So I'm confused on like how does it
So prepaid rent has to do with expenses, money going out the door. This is money coming in. So this has to do with revenues versus expenses. It's a good question. So now, after we have earned half of our money that we previously received, what do we record? Go ahead.
Debit unearned revenue and then credit $8,000 to sales revenue.
Yes,
Or
service
service
technically because it's intangible. But yeah, we lower our liabilities because no longer do we owe $16,000. Now we only owe $8,000. Therefore, we lower, so we debit our liabilities to make them go down, and we credit service revenue to increase the revenue that we earn. Yeah.
So on the exam, if like, for example, like that happened, we wrote sales revenue instead of service revenue, or does it matter?
I will not count that off. But you should start practicing because in your homework it will count you off. So start practicing whatever type of revenue it is, but I will not count it off. Yes.
So if it just says like on the exam 16,000 and it doesn't say cash specifically, but it doesn't say count, should we just assume it's like?
Whenever you see received and then the dollars after that, that means cash. It's a good question. So even though it doesn't say cash, received $16,000 means you received cash. Okay, revenue goes up, liability goes down for half of the amount that we have now earned. Any other questions on that one? Okay. Risky Ventures paid $3,000 on September 30th for insurance coverage for the months of October, November, and December. So what's the journal entry on September 30th when they pay for this insurance policy, and then after they've used it for the first month? These are deferrals.
Feel better? Yeah, feel more confident.
Okay, this one is just like the first one, but instead of rent, it's now insurance. So you would have prepaid insurance. Okay, cash went out the door, so we're crediting cash. And then we now have this benefit that we've paid for that we're not going to use until the next 3 months. Okay, so the adjustment to reflect the company using part of that insurance policy as time passes would be just like the other one. Insurance expense goes up, prepaid insurance goes down. Yes?
Wasn't the first one the prepaid or rent, wasn't that considered an accrual?
No, they're deferrals.
It was,
Because we're deferring the recording of the expense until after cash has been paid.
okay, cool. Thank you.
Yeah. So it's just like the first one, you're just replacing rent with insurance. Yes.
On the prepaid insurance for October 31st, why is it $1,000 instead of $2,000? They still have $2,000 left.
They have two, so this is a great time to think about where we are and where we need to be. So where we are is 3,000. Where do we need to be is 2,000. How do we get from 3 to 2? 1. Yes. So we credit the adjustment so that our assets accurately show that we have 2,000 left on our balance sheet. Any questions on that? I have one more. Walker Window Washing paid $1,200 cash for supplies on December 30th, and as of January 31st, 200 of these supplies has been used up. So record the journal entry for the supplies being purchased, and then the adjustment to show what's been used. Okay. So when we buy supplies, what's the journal entry? Go ahead.
Debit supplies for 1,200 and credit cash for 1,200.
Yes. So supplies are an asset. So our assets go up. It's just like the previous one, but it's not prepaid anymore. Now you just have the name of the asset. Supplies goes up, cash goes down. Therefore, it's the same thing. Now, after a month, we need to show what has been used, and what has been used goes to our expenses. Okay? So it tells you that $200 of these have been used. So what's the journal entry? Go ahead.
You're going to debit supplies expense, 200, and then credit supplies, 200.
Yes. So we take what we've used and record it to supplies expense, and then lower our supplies balance by what we've used, so that our financial statements reflect that as of January 31st, we have $1,000 worth of supplies. The $1,200 that we initially recorded minus the $200 shows everyone that you still have $1,000 left. Yes.
If it were to be a depreciation rather than just use of supply.
So depreciation's only for your long-term assets.
Okay.
But it'll also say depreciated.
Okay.
Yeah. Any questions on these? Yes.
I think like the question kind of said 200 remain on hand.
So if the question had said 200 remain on hand, then this adjustment would be for 1,000. Because if 200 were left, we had 1,200, we're ending with 200, therefore the adjustment to get there would be 1,000. Because you want your balance sheet to show what you have left, right? Our assets are going to show at this point in time, here's what we have remaining. So if we only have $200 remaining, how do we get from 1,200, what we previously showed, to 200? We have to take out 1,000. Any other questions on those? Okay, we're going to do this one together. Woo! Okay, here's the deal. Well, we'll just go through this. journal entries. This is the biggest problem for most people on this exam. Closing journal entries. This is basically exactly what it'll look like. All right, you'll be given a trial balance and then be told to do the closing journal entries. So step one is first looking at the trial balance and figuring out what accounts matter in your closing journal entries. And the only ones that matter are your revenues, your expenses, and your dividends. So you would go one by one down the list, and on your paper you'd mark, this is the revenue, this is not a revenue, you can mark it off, this is an expense, whatever. So cash, no. Accounts receivable, no, it's an asset. Inventory, haven't talked much about inventory. Inventory is an asset, it's a current asset, and it's basically all of the stuff that you have, all the products that you have that you're going to sell. Inventory is an asset. Okay? Accounts payable. No, because accounts payable is a liability. Okay? We're looking for revenues, expenses, and dividends. Unearned revenue. No. No. Unearned revenue is a liability. It is not revenue. I'm going to keep saying it. Okay? Notes payable. No. It's a liability. Common stock. No. It's part of equity. Retained earnings. No. It's part of equity. Dividends. There's our first one. Okay? So the dividends journal entry to close out dividends. If you recall, dividends are taken out of retained earnings. Retained earnings is the equity that we have earned as a company, and from that equity that we've earned, we take part of that and allocate it to dividends. So dividends lower retained earnings. Okay? So when you think, all right, if they lower retained earnings, what type of account is retained earnings? Retained earnings is part of stockholders' equity. And if stockholders' equity increases with a credit, therefore it decreases with a debit. Okay? And if dividends lower retained earnings, then we know we are debiting retained earnings, I'm going to abbreviate, and crediting dividends. For the amount shown, which is what? 1,000. It's not the amount from retained earnings, it's the amount of the dividends. Okay, so we debit retained earnings for 1,000, credit dividends for 1,000. That's the first closing journal entry. If they didn't have any dividends, this would not be applicable. Okay? Then we keep going, and we now find all our revenues and expenses. So right after that is sales revenue. Sales revenue is a revenue, so we will start there. That's our first one. Revenue increases if we had a T account for our sales revenue. It increases with a credit, decreases with a debit. So as of right now, we have $65,000 sitting as a credit balance for revenue. 65,000 revenues increase with a credit. Therefore, we have 65,000. The whole point of the closing journal entry is to get our income statement to 0. Okay, so how do we go from 65 to 0? We need a debit for the same amount. Okay, so we debit our sales revenue for $65,000. Okay, then the next step would be going through all our expenses. We have rent expense, insurance, wages, utilities, supplies. Okay, expenses are the opposite of revenues, and they increase with a debit, decrease with a credit. Okay, so all of these expenses would have their own T accounts, but I'm going to just summarize They add up to $62,000. Okay, so same logic here. If we have $62,000 in debits and we want our ending balance and expenses to be 0, we need to debit or credit all of our expense accounts. So just like we did for the sales revenue, we do the exact same thing with all of our expenses. We have rent, we have insurance, we have wages, we have utilities, we have supplies. Okay, so rent is $18,000, insurance is $12,000, $25,000, $6,000, $1,000. Okay, but we don't stop there. A lot of people stop there. That's not the point of this journal entry. And right now our journal entry doesn't balance. Because currently, so your next step, final step, is figuring out what amount goes to retained earnings. The whole point of this is to take the net income that we've earned, all our revenues less all our expenses, and move it to their permanent home in retained earnings on the balance sheet. Yes?
I'm sorry, I thought revenue would be an expense. A credit.
So that's its normal balance, but to make it go to 0, to move it to its permanent home, we have to debit revenue. We're basically reversing revenue and putting it all to retained earnings after we've created our income statement. So we made our income statement that has all our revenues, all our expenses. Now at the very end of the year, we're making our income statement start over. And the only way to make it start over is to get all of these accounts to 0. So we have to reverse them. And that's what we're doing right here. So right now we have debits of $65,000. And we have credits of $62,000, which is what all those are added up. Okay? You cannot record a journal entry that doesn't equal in debits and credits. So we can't stop here at 65 and 62. That's not allowed. Okay, how do we get them to equal? We need 3,000 on the credit side. Okay, retained earnings is always your plug in this case. So if we need a credit for $3,000, we credit retained earnings for $3,000. Everyone see how I did that? Add up all your debits, 65,000. Add up all your credits, 18, 12, 25, 6, 1. That gives you 62,000. If I have debits of 65, credits of 62, I now need a $3,000 credit so that my journal entry balances, and I have 65,000 now as my credits when I record retained earnings for 3,000. Yes.
Do you just pull that from your net income? Or
It's the same as your net income.
okay.
Now I'm just going to give you this, so you won't necessarily have net income labeled for you,
Right.
but it is the same thing as net income,
So whatever your net income is, that's what
is your retained earnings.
Okay.
Yes.
So just to make them balance, you pull the 3,000, but you pull. So if you're looking here at the retained earnings of $4,000.
I was just going to talk about that.
Okay.
So this $4,000, that's the other mistake that everyone makes, is they plug in retained earnings for $4,000. This number is from previous years. This is our beginning balance. So we operated all last year, and we'll say that that was our first year of operation. We didn't pay out any dividends, and we had $4,000 in net income. That would be the balance in retained earnings starting this year, and then now we're adding another $3,000. So don't just take that 4,000 and plug it into your journal entry because it probably won't balance. Yes.
So then the new retained earnings for the following year would just be the sum of the.
Well, let's do a T account because you're going to have to do it. So retained earnings T account is a stockholders equity account, and stockholders equity is on the right side. Therefore, it increases with a credit. Credit means right. Okay? Beginning balance, we started with $4,000. Taken from our trial balance right here, because this is the trial balance prior to doing these closing journal entries. So that's our beginning balance. Then we go to the journal entries that we recorded, and this first one, we debited retained earnings for $1,000. I find my debit side and I write $1,000. These are the dividends. Ooh. Okay, and then I have this journal entry right here where I credited retained earnings for $3,000. That's my net income. Therefore, what's my ending balance?
$6,000.
$6,000. 4,000 plus 3,000 is 7,000. Minus 1,000 gives you an ending balance of 6,000. Yes.
So you don't factor in the dividends to the original expenses and revenues.
Dividends are not an expense. We'll learn that later, but they are basically just a part of retained earnings. And then in your financial statement notes, you would explain how many dividends you paid out. But they're just reflected through that journal entry. Yes.
Okay. Can I backtrack a little?
Of course.
Okay, so the $3,000 that you pulled for retained earnings to make them equal,
Yes.
you pulled from over here, technically, kind of, in a way, right?
Yeah.
Because you know that your retained earnings is 4,000.
No. It has nothing to do with the 4,000.
Nothing to do with that.
Nothing.
Okay.
All it is the 65,000 minus each of these.
So how do you know that you could pull 3,000?
I didn't pull it from anywhere. I did it by adding up all my debits of 65. Adding up my debits of 65, adding up my credits of 62, and then comparing those two numbers to realize that I need 3,000.
Okay. And then for the account,
Yep.
you pulled those numbers from that.
4,000. This is the only number that came from there.
Okay.
And then I just went, because remember your T account is step 3. That's the summarize phase after the record phase. So after I've recorded my journal entries is when they finally come down to the T account. So all I'm doing is copying debit, credit onto their correct side, or onto the side where they were recorded. Does that make sense? Yes.
So, is it always the case that you would credit the amount of the 3,000 is always the case
No.
that you do take earnings minus dividends, or you can just does it happen to be certain dividends?
So this example has a credit to retained earnings because our revenue was greater than our expenses. Dividends always lower retained earnings. This entry will always be the same no matter what. Now, if our sales revenue had been 60,000, okay, you could have done the exact same analysis and said, okay, my debits equal 60, my credits equal 62, therefore I need a what? A $2,000 debit. This is what I was saying by retained earnings is your plug. So you wouldn't have this, and you would have a debit to retained earnings for $2,000. That's why you just have to figure it out as you're doing it. Plug in your revenues, plug in your expenses, add up all your debits and credits, and compare. And whichever one you need to make it equal, fill it in. Yes?
Okay, so if I were a company, is it good or bad to have retained earnings credited or debited? When you're
Credited.
It would be better to have them credited.
Right, because that means our revenues exceeded our expenses.
So you have if you have a debited retained earnings, then would you be operating on a net loss?
Yes. Yes.
Do we have to do a statement of retained earnings on the test?
No, you have to do, that's the other thing, is a lot of students, I ask them to do a closing journal entry and they start creating financial statements. That's not what I'm asking. I'm asking for these two things. This one, if applicable. Okay? Exactly like that. Debits and credits like any other journal entry. No financial statements. Don't start making a balance sheet or an income statement. You'll lose all the points. It's totally wrong. Okay? So you will have to do this, and you will have to do this. So the T account and the journal entries. Yes.
I apologize. Can you explain one more time on the retained earnings? So you had 4,000, you subtracted 1,000 for dividends.
Yeah.
You're left with 3,000 net income, and then you have.
No, those aren't related. The 4 minus the 1 does not equal 3,000 in net income.
That's correct.
It's just by chance.
Okay.
So you have to think of them totally separately. So this process that we did right here,
Oh, I see now.
where we figured out that we needed 3,000, that's how we figured out 3,000. It has nothing to do with the 4 and the 1.
Okay.
I should change that
That's fine.
so they don't equal.
But then you have 6,000.
Yes.
So at the end of all of this, you'll end up with the accounts cash through common stock, and then retained earnings $6,000, and that's all you'll have left.
In your balance sheet, yes.
Okay.
You still have your income statement.
Yeah.
You already created it. But yes, all you'll have left in your trial balance will be those accounts with their balances. And these will all be zero balances.
You still have them in
You
there?
have them, but they're the zeros.
Okay.
That is the same as,
On a test, would you want us to write
no, you don't have to create a trial balance.
Okay.
So it's look like this where they're all zero after.
Because you have.
But there's still, the accounts still exist in your system, they just now have a zero balance.
What's the different types of balances? Because there's trial balance, and like, what's the differences between trial balance and what is final balance, or what is it?
You don't need to worry too much about that, but the trial balance is any time that you see, which this isn't even really the best example, but it's where you look at all your accounts listed in one column and their debit balance or credit balance to make sure your debits equal your credits in total.
Yeah, I know.
So you don't have to. Yes.
Just really quick, for when you debited retained earnings, is that 2,000, right?
I think you were chatting when which is totally fine.
Oh, no,
But
sorry.
I just wanted to tell you
Yeah.
that we were going over if sales revenue had been 60,000.
Oh, okay.
It would have changed the whole situation where we would have had 60,000 in debits,
So that's-
62,000. So that's a different
Gotcha,
scenario.
so then it would be like a net loss.
Yes.
Okay, got it.
Yes.
So just to make this clear, that this whole process is not exactly what you want on the test. It's just to get the retained earning that we have to put later on the closing balance.
No, you have to. I will ask for the journal entry, and the journal entry is this.
Okay.
So you do have to do that.
That is
If all you write is retained earnings is $3,000, that's totally wrong. Because I'm asking, just like all the other ones that we've done where I've asked for the journal entry, it's the exact same thing here.
So this is journal entry, but not closing.
It's the closing journal entry. That's what they're called. Closing journal entries, there's 2 of them, 3 for dividends and your income statement. Any other questions on closing the books? Really, the only thing that's different is I'm not going to give them to you in order. So they'll be scrambled. So you have to go through and identify what's a revenue, what's an expense, dividends, so on and so forth. Okay? Yes.
Sorry. So your beginning balance on your T account was from the 4,000 of your retained earnings from the previous year, and then your dividends is from your dividends right there. Okay.
Yep, exactly.
And then your net income is
Well, your net income is the 3,000 here,
okay.
which is basically all your revenues minus all your expenses, which is your income statement.
Gotcha.
Yes.
So I haven't really done this, or like I did the assignment for that, but it was the extra practice for chapter 4 stuff. Is there some of this online that we can do example wise?
I haven't looked at that in a while. I'm not 100% sure. I think I would have added that, but I don't know. So you just look through it and see it. Yeah. This problem does not have any statements.
Okay, there will be statements.
We'll talk about that.
Okay.
Yeah, just right. And then it's set. Any other questions about closing? Yes.
On the homework, just a quick question. Is it better, so like I think, sorry, this goes back to what we were doing with the journal entries.
Yes.
You know how you had September 30th versus October 31st? Are they asking for just the adjustments?
Yes.
Okay,
Yes.
just the adjustments.
They're asking, the homework is just asking for the adjustment.
So we should go through what they had before, right?
You could, but don't record it.
Right, and don't make that clear. Okay. Yeah, I was like, I think that's what they're asking.
Okay? Okay. All right, this is posted, but we'll go through it. Also, not all inclusive, so don't just study this and think that you'll be good to go. There is more in each of the chapters than what is in this PowerPoint deck. First, it's 100 points. 20 multiple choice questions are each a point, and then there's 5 problems. You can't use a graphing calculator. You don't even really need a calculator, but if you want one, it has to be a simple calculator. I will provide your Scantron, so all you need is a pencil and a calculator. The 5 problems will be these. So the first one, this is really the only one that has to do with financial statements, and the next slide talks about that more. But essentially you have to know the main components of each of the 4 financial statements. The second one is, I'll give you a list of accounts, and you have to tell me, is it an asset, is it a liability, is it equity, is it a contra asset, is it revenue, what is it? Okay, and then it's normal balance, meaning does it increase with a debit or a credit? Third problem is just the journal entries that we've learned from chapters 2 and 3. So that'll be its own problem. And then chapter 4 will have its own problem as well. That will be all adjusting journal entries. And each of those have about 5 or 6 different transactions. And then last is doing what we just did, the closing journal entries with retained earnings T account. Yes?
Will any of the T accounts kind of be compounded like the other ones that we've done where you need the beginning balance?
Okay. It'll all be isolated in a problem.
Okay.
Okay, so here are the 4 financial statements. Your income statement is all your revenues minus all your expenses equals net income. Okay, your balance sheet is all your assets, and they have to equal your liabilities plus your equity. Okay, statement of retained earnings is the beginning balance like we just saw, plus net income from the current year minus dividends gives you your ending balance in retained earnings. And then finally, the one we've talked the least about, statement of cash flows, is all of your operating cash flows, investing cash flows, and financing cash flows. And those equal the change in your cash balance from last year to this year. So you just need to know the components. Matching problem. Okay, debits mean left, credits mean right. Always remember that. Assets increase with a debit. They're on the left-hand side of the equation, therefore, if debit means left, they increase with a debit. Okay? Your liabilities and your equity are on the right side. Credit means right, therefore they increase with a credit. Okay? Your revenues increase with a credit. Your expenses increase with a debit. And remember, like we just talked about, in all your journal entries, your debits must equal your credits. So again, if all you knew was debit cash for $500 and you had no idea what the credit is, at least write this. Whoops. Don't write that. Write that. Okay? That will at least give you most points for the journal entry because all you're missing is the credit. Okay, but you'll get a point for this, you'll get a point for these. All right? So fill in as much as you know. Yes?
I'm pretty sure you answered this before. Do you have to write debit cash credit?
No, you do not. But if you write, let's see. You got to make it clear. I don't know, there's so many things that people give me that I can't even give you all the options, but debit's on top, credit's on bottom, and preferably indented like so. Yes?
Like you just typed revenue, like
I knew someone was going to comment on that.
so you're going to be is semantics of it going to be part of it?
The only one that's semantics I don't care about is revenue.
So we can just type so if I can type revenue, like if I didn't know what kind of revenue it was, as long as I knew it was revenue.
Yes.
Good. Okay.
But if you type revenue and it's unearned revenue,
sure.
That's the only one that won't count. But all the others, if you didn't know sales, service, whatever, then that's fine. If I don't immediately know what you did, you're going to get it wrong. Or if I know that you're trying to play me because you aren't sure what it is, and so you write something like, oh, it could be this, it could be that. Like if all you wrote was rent, is it an expense? Is it prepaid? Is it, what is it? So if you write rent, it's wrong. So just keep that in mind. Be as clear as possible in what you're saying for that reason. Okay? All right. Adjusting journal entries. Carrying on. Remember that revenues are recorded when they are earned, not when we receive the cash. So only think about recording revenue when we've actually earned it. Okay, the service has been provided, the goods been provided. Same with expenses. Has the expense actually happened? And only once it's happened. Does not matter when the invoice comes, when we get billed. Doesn't matter when cash leaves. It gets recorded when it happens. The two kind of checks for you on that problem are adjustments never involve cash. Okay, so if you go down your paper and you wrote cash, figure out another account because that's wrong. And then the other one is they always have one balance sheet account and one income statement account. So if you can remember that, you can check your work to see, okay, each journal entry has the balance sheet and income statement. Only for adjusting journal. Deferrals and accruals. Okay, deferrals are postponing the recording of revenue and expenses, meaning cash moves up front. These are our prepaid accounts or our supplies and our unearned revenue. All right? And then the accrual adjustments are recording the revenue and expense prior to cash. So we've earned the revenue and we're going to get paid later, which are our receivables associated with revenues. And then the expenses are our payables associated with those expenses. If we've incurred the expense, but we haven't paid for it yet. If you want a list of all the accounts we've learned in one place, here it is. These are the assets that we've talked about or you should know. Cash, supplies, AR, Any prepaid accounts, prepaid assets, inventory. Land is a long-term asset. Yes?
So for the 5 problems, the accounts, for the types of the accounts, all those are credited or debited, right? That's what you...
Yeah, so if it said supplies,
Okay.
you'd have to write it's an asset and its normal balance is a debit.
Okay.
Remember we learned about contra accounts. These are the only 2 that we learned. Accumulated depreciation and accumulated amortization. And that's the allocation of the cost of buying these long-term assets to expense, to your income statement. So as you use these long-term assets, we have to allocate part of that to our expense, to our income statement. And that's how you do that. So accumulated depreciation is associated with equipment, buildings, vehicles, machines, whatever it is, tangible, and your amortization is associated with your intangible. We talked about software, patents. We didn't really talk about patents, but it's an intangible asset. The logo, trademarks. Yes.
Those are both that's credited, right?
Yep. So contra asset account increases with a credit rather than a debit. Is that what you're asking?
Can you say that again?
Contra asset account increases with a credit rather than a debit, which is why I put them in parentheses. I know software and patent are in parentheses, but get it. Okay, liabilities and equity. Accounts payable, salaries and wages payable, interest payable, all your different payables, okay, including our bank loans, notes payable, and then our friend unearned revenue, which is a liability, not revenue. Okay, equity, 2 accounts, common stock and retained earnings. Revenue, I put up 2 different options, sales or service, but like we just talked about, you can take your pick, your best guess. And then expenses, all of our different types of expense, which generally match our different types of payables that we have, supplies, amortization, depreciation, salaries and wages, so on and so forth. The 3 steps. Analyze, I'm not going to test you on the analyze step, but it can be helpful because what I see is that you're thinking through a problem and you just automatically say credit expense and don't even think about why that makes sense or if it makes sense, even though you know that expenses increase with the debit. So take the time to think through what you're writing down and think through what happened, what was exchanged for the adjustments, think about where I am, where I need to be. The difference between those is my adjustment. The record phase is all your journal entries. Debit dollars must equal credit dollars. And then finally summarizes the T accounts. I'm telling you now that T accounts are helpful for a few of the multiple choice. So keep those in the back of your minds as something that can be used to help you figure out what happened and what you need. 2 ratios. Anyone remember the current ratio? Go ahead.
Current assets over current liabilities.
Yes. Current assets over current liabilities. What makes them current? 1 year. Yep. So our assets are going to be turned to cash or used up in a year. Our current liabilities will be paid off in a year.
Will we have to figure out what?
You won't. It's a multiple choice question.
Oh, okay.
And so I don't list accounts like they had cash of this, that, da, 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 da. I just give you various subtotals and you have to figure it out. And know the formula. Net profit margin.
Net profit over
Income over revenue.
Yep, net profit or net income over revenue. Okay, that one tells you how much they earned, bottom line, after all their expenses for each dollar of revenue that they made. Those are the only 2 ratios we have learned so far. And that's it. What questions do we have? Yes.
Could you really quickly go over an example of cumulative depreciation and amortization journal entries? Just for a visual reference.
It'll look pretty much just like this, where I would say the computer equipment, which was blah, 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 and I think it might even use the word depreciation in the prompt. And so your journal entry, all you have to do is really memorize the journal entries, which is that. So it'll tell you equipment depreciated $500. And you would record this journal entry.
So amortization basically means depreciation.
Say that again? Amortization.
Amortization is at least synonym for depreciation.
Yes, except for it's for your intangible assets.
Oh, okay. Sure.
So software, logos, patents. Yeah, depreciation is for your tangible, amortization for intangible. But they operate the same way. Journal entry is the exact same except for the word. What other questions do you guys have? Anything at all? Rule?
So what you do? Like how would you know?
So your deferral adjustments basically mean that cash moves up. So we either pay cash in advance for something or we receive cash in advance for something. So all those practice problems that we did at the beginning of class were all deferrals, where we had the prepaid accounts or the unearned revenue. The accruals are all of your receivables and payables, which we kind of learned previously, so they're the easier ones. Wait. Yes. Let's find you some. So these, and they're in the slides. So if we provided services and we're not going to be paid till next month, we've earned the revenue, but we haven't received the cash, so we record our cash placeholder, which is a receivable, accounts receivable. And then our expenses we've incurred but haven't paid yet. So we have the expense and the payable amount to show that we have to pay them. And these are all, they all work the same way. You just use the same word. Any other questions? Okay, so one thing is, I generally try and allow you extra time if you need it. You'll have the whole class period, but please do not, because your comrades are in this room right before, I will let them go until 10:55. Okay, so don't be glaring at me through the door because I haven't let you in yet. Wait until they are done. And at 10:55, I'll let you guys in here, and then we'll go. And then you can have extra 10 minutes as well. All right? Okay, you can come see me today or Thursday before my first test, or you can see me.
Yeah, so it's cumulative.
Is this posted yet?
This is posted. These right now.